How would you like to earn up to $9,000 as a non-refundable tax credit on your next income tax return in Canada? What would you do with that money? Would you pay off your car loan? Would you eliminate your credit card debt? Would you take your family on a cruise? There's so many things you can do if you're able to get this tax credit. Now, just remember that just because you get a $9,000 tax credit does not mean that's how much you're going to get back. It is a credit which reduces your taxable income by up to the amount that's legislated by the Canada Revenue Agency. So depending on which year that we're in, will depict the amount that they're going to give you this non-refundable tax credit. But I've been able to get this tax credit since 2010, and I have been reaping the benefits and rewards of this amazing program. And I want to share that with you on how you can possibly get the disability tax credit. Now, in order to qualify, you will need to have a severe and prolonged disability. Now, there's lots of disabilities that qualify within the program. Some include Crohn's disease, dementia, multiple sclerosis, depression, anxiety, and diabetes, just to name a few. So that's the first thing you need to do is figure out if you're going to qualify. Now, if you meet the criteria, then what you're going to need to do is there's a disability tax credit certificate, a T2201, and what you'll need to do is there's a digital form or there's a paper form that you can fill out. You are going to need to fill out Part A, which is all of your personal information. And then what you do is you take the form to your medical practitioner and you get them to fill out Part B. Now, if your practitioner is willing to fill out the form for you, chances are you're going to get an approval. However, it doesn't necessarily mean that you're going to be approved, but if your doctor is willing to go out of their way to fill out the form for you, then that means that they know that you're likely going to get approved. Now, you're going to have to pay them a fee, and it could be upwards of $100 to $150, and you still have to pay that fee regardless if you're approved or not. However, if you meet the criteria of the severe and prolonged disability, it's definitely worth a shot. Now, once your doctor has filled out the form, they will give it back to you, and then you send it off to CRA for an approval. It will take up to 8 weeks before you hear back from the CRA, and they will mail you a letter with your approval or denial. But don't forget, if you're denied, you can still appeal the decision. If you have any additional questions or concerns, feel free to comment below. And remember, my name is Cynthia, and I help people just like you increase your financial IQ and help you on your path to financial security. We'll see you in the next video.